We have seen that banks are facing a race to improve clients' experience while offering their services. Banks today not only compete with financial institutions anymore, but also with fintech startups, IT giants, telecom companies, and this is the right slide, telecom companies and consumer sector providers. Now, this all comes at the end of a period where banks have been continuously underperforming the market, and in Europe, this has been driven by a lack of profitability and high costs. High costs not only due to the increased regulation following the financial crisis. On top, banks today are facing the continuous challenge of a low interest rate environment. So where does the tech opportunity lie for banks, and where will the change happen? I will introduce you now to our 8 clusters of change that we have identified in our paper, and I will basically give you a bit of inspiration to introduce the second panel, the digital bank. Let me start with investments, assets, and wealth management. The increased sophistication of software, the online access, and the demand for low-cost investment advice have led to the emergence of digital asset managers, the so-called robo-advisors. They are offering new forms of investment and wealth management by building diversified portfolio of low-cost ETFs. By automizing the whole investment process, robo-advisors can offer these services at significantly lower costs compared to incumbent banks. The technology is still in its infancy, but what is very interesting is that it offers the access to all the unbanked and still underbanked parts of our populations in Europe, but also globally. And I would like to give you an example for that. If we just look at the US market, the mass affluent market in the US, if we take 20% of that, we believe that these client clusters hold about 7 trillion of assets, so clearly indicating the potential of growth in this segment. How have the banks reacted to robo-advisory so far? And I would like to give you an example of our Swiss banks. You know that Swiss banks have a deep breadth and wealth of investment advisory, and we have started to combine our traditional services with robo-advisory, big data, and our algorithmic strategies, and we have launched solutions like UBS Advice or Credit Suisse Invest. Let me switch over to payments and trading. Transaction services are probably the most visible field of tech-driven change. Alone 32% of the largest fintech unicorns focus on the payment area. While the emergence of P2P payment services and all the services around digital wallets can be seen in the context of better digital access and an increasingly cashless society, technologies like blockchain could significantly change how we think about transacting on a global level in the future. Distributed ledger technologies tick basically the key factors for significantly changing transactions in the future. They provide an acceleration of processes, a reduction of error-prone procedures, and they allow a further standardization of transactions. Smart contracts, as already mentioned by Veronica before, are an example of offering a completely new combination of traditional contracts or transactions with and together with surrounding services, like, for example, insurance services for that transaction, FX hedging, financing solutions, but also even logistics. So smart contracts allow us to bundle everything into one contract, in one tool, and even price it. Banks are still at the very early stages of blockchain, and research has shown that probably more investment and more research has to go into the technology before we see a widespread adaptation throughout the financial industry. Personal financial management will evolve from the pure categorization of clients' transactions towards automated savings and investment strategies, and here largely leveraging on robo-advice and artificial intelligence. With regards to cloud computing, consumer protection is still at the forefront of our minds and has been the key topic that needs to be addressed probably also over the next time. And here it is really important for banks that we start speaking about the advantages of highly secure clouds or hybrid cloud services to our consumers, but also, of course, to the authorities and regulators. For decades, data handling has challenged banks. And today's technologies not only allow the efficient storage of data, but they also allow us to forecast behavior, to forecast financial information for our customers to actually provide enhanced services. The use cases in this area are manifold. For example, in risk management, the optimization of current operating models, and as said, the enhancement of customer service. Then last but not least, the application of technologies in RegTech space is compelling, and we are seeing a significant potential to deliver consistent and improved quality for our services, and also on top reduce the cost of our compliance processes. And this is a very important point. Here, this is an opportunity to free up capital that can be invested in innovation. Security and privacy basically and finally link all the points together. It is of utmost importance that fintechs reach the highest level of security and are trusted by consumers to be actually used and implemented. And this is actually really important because fintechs are using sensitive data, and there is a huge risk that if consumers are finding that they are not feeling secure with regards to the risk that sensitive data is carried. Last but not least, let me lay a focus on funding and lending. 42% of the largest fintech unicorns focus on lending services. And here I would like to introduce a concept that we also see in different areas of fintech applications. We see, first of all, in the evolution of service providing, that there are alternative platforms next to the traditional banking platforms. But we also see how banks react. Banks are also starting to build up their own peer-to-peer lending platforms and combine it with the traditional offering. If we would see the entrance of completely new technology, like, for example, the distributed ledger technology, we could also see the disruptive approach that basically the whole segment moves onto a completely alternative platform. Now, when we look at how fintechs and fintech services are operating along the value chain, and this is a slightly different perspective from our 8 clusters of change, where we basically looked into where the application fields are arising. This slide is giving you a bit of a framework how we see that fintechs are operating. First of all, the aggregators, they are not themselves producing new services, but they actually make the client's choice more efficient. So they basically give advice, they make the decision faster, and they also help to compare services. The second category, the displacers, is the category that we see most at the moment, and we also think that this will be continually to be so. Displacers are focusing on one part of the value chain. They are offering increased customer service. They're providing an outperforming solution and basically allow banks to integrate them into the value chain. Last but not least, there are obviously also the replacers in the markets. They are still quite small, and we think that the replacers need to be monitored carefully, because if we would actually see the danger or the evolution of a disruptive strategy from a displacer, this could actually really shake up the banking industry. So let me conclude. What do we think that banks will be facing with regards to digital investment? First, and this is also extremely important, banks are working on heritage systems, on legacy systems, and we need to address the changes of our legacy infrastructure in order to be able to cooperate with our fintech companies and include these services into our landscape. The second point is a soft factor, but it's not to be underestimated. We basically all have to not only talk about digitization and embrace digital novelties and solutions, we also have to become digital as organizations, and we have to think digital. So this is a continued process and a journey where we have to take our colleagues, but also our partners and fintech companies at the hand. Then, obviously, we need the existing banking landscape and regulatory framework to allow for a further evolution of the cooperation between fintech innovation and our banking services. And we have to make sure that fintechs are able to innovate and continue to innovate also in the future, and this needs capital and the regulatory framework to do so. Concluding, banks are facing digital change, and digitization has already started and will continue to reshape the banking environment drastically. On the fintech side, it is all about achieving the highest level of security and consumer acceptation. And in order to bring the two together, we actually need cooperation and partnership in Europe with our partners. Thank you very much.